I don't think we're at the end of a 4-year cycle. I think the world is changing. And I'm actually very bullish in the long run, even though I won't give you price certainty. But I think now is a great time to buy at a 3,000 entry point for ETH, especially if you're an investor for more than a year. If you're a short-term investor, you're thinking day by day, it's a little bit scary right now. But if you believe in the long-term thesis, now is a great accumulation period. If you liked ETH at 4,400, you really like it at 3,000. So first of all, the beautiful thing about not being a fund, we're an ETH treasury, is that we believe we hold permanent capital. Meaning whether we own 2 billion, 3 billion, 4 billion, it will go up and down. At some point, we had another $500 million of ETH. As the prices come down, we own less value of ETH, even though we own the same number of ETH.
Just when the market thought Bitcoin held an unshakable lead, a surge of institutional interest in Ethereum is rewriting the script. Joseph Chalom, a leading expert in institutional investment strategy, offers a revealing perspective on how Ethereum is carving its place in a market still dominated by Bitcoin. His analysis highlights a significant shift in institutional behavior, one that doesn't challenge Bitcoin's role as digital gold but does question its monopoly on narrative and utility. Institutions are no longer merely experimenting in crypto, they are moving decisively into Ethereum through stablecoins, tokenized funds, and increasingly sophisticated DeFi applications. While Bitcoin remains the apex store of value asset, Ethereum's capacity to generate yield through staking provides a tangible productivity advantage, one that institutions find increasingly compelling, especially given the historical limitations of spot ownership and ETF structures. What stands out is the idea that this isn't a zero-sum contest with Bitcoin. Rather, it's a race to accumulate ETH ahead of wider adoption, reflected in recent 13F filings showing a surge in institutional holdings. In 2025, with Bitcoin ETFs already shaping capital flows and Ethereum ETFs now capable of staking, the comparison between the two assets is more relevant than ever. Bitcoin anchors the macro conversation, but Ethereum's growing role in tokenized markets and financial infrastructure places it on a distinct evolutionary path. The key takeaway is how these two assets will coexist, complementing each other as institutions help define the future of digital finance. Got a take on where Bitcoin and Ethereum go from here? Leave a comment, share this with your network, and hit subscribe to stay ahead of the next move.
So I think there's 3 messages I want to share here. One is just the idea that institutions are coming to the Ethereum network, and adoption across stablecoins, tokenized funds, and actually high-quality DeFi is now here. Institutions are here in force. Because of that, institutions want to get exposure to Ether, the token that is essentially securing the Ethereum ecosystem, and they have a few ways to do it. Institutions have a hard time owning spot, whether Bitcoin or ETH, and they also, some of them have a difficulty owning the ETH ETFs that are out in the market. And even if they can, those ETH ETFs until recently have not been able to stake their ETH. And when you have an asset that's as productive as ETH, in contrast to Bitcoin, if you're going to own that exposure, you want to get the productivity. And the best way to do that is through a public wrapper of a digital asset treasury, because we can stake nearly 100% and get that yield. And we'll talk more about that later. But interestingly, the DAT phenomenon started as a retail phenomenon. Actually, a lot of Korean, Asian investors were early investors in the DAT phenomenon, whether it was Bitcoin or ETH. We've seen the institutions come, and these are the largest institutions in the world. You can see them in their 13F filings. It's really boring, but every quarter, 45 days after quarter end, institutions have to tell you what public entities they own. And we see the likes of Fidelity and BlackRock owning SharpLink, as well as other digital asset treasuries. And that percentage of ownership has tripled in the past quarter. So it's a much more institutionally aligned strategy than even before. And a lot of that is because institutions want to own Ether in a better wrapper. The cooperation is having a shared mission, meaning we are not against Bitcoin. I don't wake up every day trying to flip Bitcoin. I do think Ethereum has higher quality use cases beyond just owning a token and moving a token, which is what the Bitcoin network does. It's got a very unique singular narrative around store of value. But I think in the long run, if you talk about the potential use cases, Ethereum is going to lap Bitcoin in a very significant way. And if really smart people backed by really institutional investors have the same thesis, we should be cooperating and telling that story, even though there might be nuance in how we tell it. For example, I'm not out here telling people what the price of Ether is going to be in 3 months or 6 months. I'm telling an adoption story. The competition is there's a race to accumulate Ether at the current price. I think it's a really good entry point at roughly 3,000, which is the price of Ether today. That said, I think others have put limits on what that accumulation will be. I think Tom Lee's been very, very public. He will own 5%. I think we're of the same sentiment. You don't want to destabilize the network. So I think we are in a race to accumulate, not to be the first to get to 5%, but to accumulate it for investors at the lowest price possible, as we believe the price will go up significantly over time. So we compete to accumulate and get to that 5% number, but we have the same mission and we're on the same panels. We're at the same locations. We're at the same venues telling the story, maybe slightly different ways. Let's just start. If you have a reserve currency, you better have a reason why you think it's a really good reserve currency. Like if you're the treasurer of the king and you're collecting gold, you believe gold is a really good asset to hold in the long run for the kingdom. So Ethereum. I will tell you that having worked in financial services for 20 years, you and I worked at the same firm. I even worked to scale a fintech business that was all around making investing easier for big institutions to do portfolio management, trading, risk management, and operations. And it was an incredible front row seat on, frankly, how inefficient the current financial rails are. Our economy is strong. People are investing, but they don't realize the amount of human interaction and capital that's necessary to even just trade stocks, bonds, and funds. In the US, things settle on a trade date plus 1 day, meaning if you trade something on a Friday morning, you don't get your money till Monday. And in in Asia, in many countries, it's T+2. So you're at risk every single night that your counterparty won't be there or the markets will move. And it takes insurance and ISDAs and all sorts of counterparty risk and capital just to buy and sell something between 9:30 and 4 every day. And it's locked to where that venue is. So for example, if your stock is listed at NASDAQ, that's where it trades during the day.
If you want to understand where digital finance is heading, follow the institutions, not the price chart. And right now, their moves tell a very different story. Ethereum's greatest strength lies in its role as a decentralized, programmable settlement layer, capable of fundamentally reshaping how global financial assets move. This doesn't diminish Bitcoin's role as digital gold but highlights a growing divergence between the two assets. Bitcoin remains the dominant store of value, yet Ethereum is carving out a distinct role within the broader financial system, especially as trillions in assets move toward tokenization. Its ability to settle transactions 24/7 instantly addresses inefficiencies in the $700 trillion traditional asset market, giving Ethereum a clear productivity edge even while Bitcoin maintains macro dominance. What stands out is Ethereum's institutional scale advantages. Unlike Bitcoin, each unlocks yield, restaking, and additional incentives unavailable to retail investors or ETFs. Institutions holding billions in ETH can capture premium returns while maintaining assets in regulated custodians, reflecting Ethereum's growing maturity. JP Morgan's first tokenized private fund illustrates this shift. It's less about adoption and more about proving institutional-grade technology. From your analysis, Ethereum complements Bitcoin rather than competes with it, providing a functional layer to a monetary backbone. Together, these roles may define the evolving landscape of digital finance, balancing wealth preservation with productive, scalable financial infrastructure. Let's get back to the interview.
The promise of Ethereum is this idea that you have a decentralized rail that allows a ledger that can settle trades instantly. And I know that sounds like nothing to someone from the crypto space, but let's be real. Crypto is a $3.5 trillion industry. There are $700 trillion of world financial assets. if you could start trading more and more of those digitally 24/7 that settle instantly, Ethereum is going to be that programmable layer that is trusted, neutral, and decentralized, that's going to start accumulating more and more. And it started with stablecoins, which is just a version of tokenizing a dollar. There's 300 billion today. Secretary Bessent thinks it'll go to 3 trillion in the next couple of years. Tokenized stocks, bonds, and funds are only 30 billion. You heard Larry Fink from BlackRock on October 14th say his vision is all assets are going to be tokenized. That's trillions of dollars coming on chain. And Ethereum has the license to win. There may be chains that are slightly cheaper or faster, but Ethereum's been up for 10 years, has never gone down. And Ethereum has the liquidity and the trust that other layer ones don't. That's why we believe we're in a super cycle of institutional adoption. And we're in the early innings. Even though Ethereum has been around for 10 years, it took 10 years to build for this moment. Now is the time to own the asset Ether, which secures that network, which we believe is going to be the global settlement layer for finance. And if you believe that, Ether is a great asset to hold as a long-term treasury asset, as permanent capital. So if you can't tell, I'm very enthusiastic, even though the price volatility is high in the last few weeks. That's okay. What's interesting is what we've learned is if you own billions of dollars of ETH, you can do things that retail ETH holders cannot do, and you can do things that ETH ETFs cannot do. The first thing is you can go out to the ecosystem and think of restaking your ETH. So for example, we just did an announcement with our partner Consensus, the largest Ethereum company, has been around for 9 years, to essentially partner with them and their layer 2 blockchain, Linnea, that you just described, and then go out into the DeFi ecosystem and find very high quality partners like EtherFi, like EigenCloud, where you can restake your ETH, in this case, in a liquid restaking token, where not only do you get a higher rate of return than you do from basic staking, each of those parties is willing to give us economic incentives. And why are they willing to give us economic incentives? Because very few actors in the world can pledge to put 200 million of capital or ETH with them and lock it up for multiple years. So this idea that in crypto and in protocols, you measure yourself by TVL or total value locked, we can put the L in TVL. We can say to them, this is permanent capital. We're willing to leave it with you for 2 years. Whether the price of Ether is high or not, we will do that with you. So you can get higher risk-adjusted returns because they're giving you ETH incentives. And we did one other thing that no one had done before is we kept it in our qualified custodian anchorage. So we're not sitting in some DeFi smart wallet. We're sitting in a regulated qualified custodian. So you get restaking yield in the low 3%, plus you get incentives from the parties to leave it with them for several years. So you get DeFi returns and you can keep it in a qualified custodian to reduce your risk. That's something that retail investors can't do. It's something that the ETH ETFs can't do. And it's something you can do when you own billions of dollars of ETH and you have an incredible institutional team who knows how to do it. So again, if I sound excited, we are breaking barriers and raising standards, which benefits investors because it flows back into our balance sheet as income and revenue. So it's super fun. John, that was a long answer to a short question. We're doing things to raise the standards, and it goes to the benefit of our shareholders.
Observing the current market dynamics, it's clear that Bitcoin continues to hold its position as the primary store of value, serving as a digital anchor in a volatile ecosystem. At the same time, Ethereum is emerging as a complementary infrastructure capable of supporting tokenized assets, staking yield, and large-scale digital settlements, capabilities that Bitcoin's design does not offer. The increasing institutional adoption of ETH, coupled with strategies like treasury allocation and rest-taking, signals a broader shift toward functional utility alongside monetary value. Companies pivoting from Bitcoin to Ethereum or allocating ETH as a reserve reflect a recognition that digital finance is evolving beyond a single dominant narrative. This coexistence suggests that long-term portfolio strategies may need to balance both assets, Bitcoin for security and wealth preservation, and Ethereum for productivity and participation in the emerging tokenized financial system. How do you see the evolving relationship between Bitcoin and Ethereum shaping long-term institutional investment strategies in digital assets? If this analysis reshaped how you view Bitcoin and Ethereum's roles, share your thoughts in the comments, spread the video with your network, and subscribe for more in-depth crypto and finance insights.